Good morning, folks. I wanted to go through my trade summary for the 2nd of August, being Wednesday, 2023. On the 2nd, we have the Asia session having a push to the downside, which I should add while I'm here on the, I believe, the 30 minutes or the 1 hour. Because at this point, we can see clearly that during the Asia session, we respected this bearish order block and allowed price to move lower. The problem is that this is definitely outside the kill zone because it was during the Asia session, so we could not capitalize on that trade. So I kept an eye out on it as we traded. I think this was probably actually yesterday. There was a higher one on with the same setups, because I realized that throughout this week we've been doing nothing but respecting order blocks for lower prices. In the same fashion, we have this one, because again, I think I have to remind you all that I look at the 1 hour as my high time frame, and 4 hours if I don't see clarity, then I toggle back down to the 5 minutes for entries. So on the 2nd, on Wednesday, I was only paying attention to the euro and not the pound, because I saw it to be the weaker of the two at the time. Anyway, so we got the Asia session fall off, and following the rules, following the protocols, during London session, we swept sell side. And in my mind, I was already looking at these order blocks and these fair value gaps from previous times, which actually made me jump in a trade at the low and rode the buy up and waited for confirmation to see if we could purge one of these buy sides so I can re-enter a confirmation entry, but we never did get that. And as price fell off, I believe going into the New York session at around this point, I bought even more, being stopped out in a bit of profit from this trade. I decided to pyramid by adding even more, waited for confirmation inside of this BC and wanted to take it up, and it did go up for a bit, then melted up from there. So basically, the entirety of Tuesday, I was doing nothing but strong arming the market, trying to buy it up, even though I should have been paying closer attention to the draw in liquidity, which I'll get to at the end of this video. But this was essentially the summary of what happened with the euro. Moving on to the indices at the New York AM session, I believe we have a very similar structure there. We have our Asia range, and then London meandered around slowly. And to be honest, I believe that we're going to respect this old new week opening gap and push a little bit higher. The old one is just the last week's new week opening gap, while this is the current week new week opening gap. So we melted through that. We bounced off of a 1 hour PDRA. I did not highlight it on this chart, but I remember that we did. So this is the entirety of London. I did not do anything with it, of course. At this point, when we stepped into New York, I noticed that we had relative equal highs. I know on this chart they are perfectly equal, but on the ES chart they are not equal. They are relatively equal. Let me pull that up now. Actually, as we can see, it's relatively equal. This one is actually still lower than the main London high that was created. So at this point I was looking at it, right, and I kept in mind that we may not even be able to sweep London's low in order to take a buy entry. I was paying very close attention to this new week opening gap, the previous week's one, because I had multiple confluences on a 4-hour and a 1-hour. This is an order block. This whole range is a bullish order block. I think I may even be able to pull that up now. Let's see the 4-hour. I think it must have been a 15 minutes then. It was on the 15 minutes. So on the 15 minutes I noticed these two candles before a rally to the upside and took that as the order block. So I, in my mind, was really paying attention to this to the old NWOG and was anticipating a minor rejection from the new week opening gap to clear the relative equal highs, and at that point we would be at the bottom of the new day opening gap, remembering that we had this massive new day opening gap from this candlestick's closing price to this candlestick's opening price. In my mind, I wanted to see us trade back into it by wiping the relative equal highs and then melting off from there. So I wanted to take an entry there, and I did what I shouldn't have done again. I blindly entered without a confirmation entry. So price obviously fell off, wiped out the stop loss, and again came back to this level, consolidated for a bit and shot to the upside again. And I took this as the market structure shift and pulled out this bullish order block, this candlestick right here, the 11-15 candle. Pulled it out and took another buy entry there. Stop loss at the low, got wiped out of course. And this basically showed me that we didn't need to clear the relative equal highs, and this was basically the resistance that I was looking for to sell price off. I just thought we were gonna bounce off from here, then fall off from there, but we never did come back to this new day opening gap. So that was basically it. And even going into lunchtime, which was basically this range, 12 o'clock till 1, this was lunchtime movement. Nothing really happened. New York PM, we still got basically the same thing. Displacement lower, didn't really get a market structure shift for any buy entries. So the drawing liquidity was basically what was pulling this market at the time. And since I went in with bigger than I should have lot sizes, I took losses here as well. So going into my trade summary for the day, for the 2nd of August, as you can see, ignoring these two, especially ignoring these two trades, because this was technically the day before but was carried over to the 2nd, so just put that out. We can see that yesterday was just a series of losses. I did start off the day with a $200 gain because I took partials off of I believe a 7-lot entry on Euro USD. So I took out 3.7 or something like that, something along those lines. And the rest were smaller, and I believe, yeah, the stop losses were all hit. Whenever I took a buy, it was always accidentally or a quick jolt to the upside. But we clearly see and could tell that the euro was generally bearish the whole day, and any pullback we got was just for a premium to sell off again. And we can obviously see whenever I did take a sell, it was always in a profit. So at this point, Euro USD, I took a big loss yet again because I was strong arm in the market, as I said. And then we worked into the London session with SPX 500. You can see with the lot sizes that I traded with already indicates a not so healthy risk management. Because this is way more than I should be risking at all, no matter what the trade idea is. And it showed by taking a $600 loss, 1,786, 700 and 700. So if you just subtracted these from the total losses for the day, I was basically down. That would make it a $4,054 loss. So this was really a big loss for the day. If it was not for these, this would have been massively deteriorating for the account. I guess the mindset that I went in with was the fact that I gained profit. I was already on my high horse and I wanted the train to keep on pushing forward, instead of paying attention to my risk management and learning to take a break or a breather whenever I do take profits from the market. So this taught me a few things actually in the last 2 days. The first one is that I should wait for my setups no matter what. No matter what the market conditions may be, I should wait for the confirmation setup. That's the first thing. Because I noticed that sometimes I can be a little bit impatient and jump the gun by hopping into a high time frame PDRA instead of waiting for a confirmation setup that shows us that market is going where it's supposed to. The second one, of course, ties to the first one, which is to not have fear of missing out, because the main reason I enter those trades, those as they would call it, the sniper entries, is because I have the fear of missing out. I have a fear of missing out on the trade from an extreme discount or an extreme premium, and I would just end up jumping the gun instead of waiting for the confirmation to show that we can in fact take the trade comfortably. Then the last one, which has been a real lesson in both the Euro USD and S&P 500, which is to remember your drawing liquidity. I said I was going to come to this towards the end of the recording, but let's see. Let's add Euro USD on the daily. On the daily chart, the entire week we've been dropping to this BC, this buy side imbalance, from this candlestick's high to this candlestick low, and we are trading in it at the moment. I would like to believe that we were just trading inside of it to completely cover it and possibly tag into this other block. So I believe that these are the drawing liquidity. If we ever passed this portion of the other block, then we are definitely aiming for sell side liquidity. So I should have kept this in mind going into the week, especially when we were at this point, because this was literally just yesterday. We hadn't tapped into the buy side imbalance yet. We opened up, we rallied up. I should have taken that as an indication to tell me that we are going into the BC, into the buy side imbalance or side inefficiency. So I think this whole day we're going to be bearish and possibly cover the BC completely and tag into the other block that I mentioned earlier. before seeing a possible rally to the upside or even a minor pullback to the upside. Comparing that or contrasting that with the dollar index, we can clearly see that we are also in a CB, very similar structure with an order block right there. So I'm watching to see how we close off the week and the day today, because it's probably gonna tell us the direction of the market moving into next week. This candlestick right here on a weekly chart, I am paying close attention to it. I would like to see how we close off this week and next week, because this candlestick for me is a deal breaker. If we close off this week above it without as a body, I don't mind seeing a wick in this area, but I don't want to see the body of a candle above this bearish candlestick, because we may see a possible rejection from this other block that we're currently in, which is the complete closure of the CB as well. We may see a possible rejection from there for lower prices, because we still have relative equal highs and a weekly buy side imbalance. I mean, it's a very tiny fair value gap, but still a drawing liquidity that we just went very shy of reaching. So this makes me very attentive, especially tomorrow being NFP. We may see massive liquidity or volatility injection in the market. So I am possibly not going to trade tomorrow's price action unless it's very clear, and preferably post NFP. So this is what I was referring to when I say that the drawing liquidity is critical. The same or similar is true with ES mini. We can see that throughout this week we've obviously been running for the BC, the buy side imbalance, and an old open range gap that we didn't feel. So my mind is telling me that we're possibly reaching for this order block at this point, or possibly reaching for the body of this candlestick. If we can reach there today, being Thursday, then there's a high chance that NFP is going to take us higher and possibly make a new high or a retracement of 30% of the weekly candle range. Going down to the daily chart, we can obviously see that these are all inefficiencies that needed to be satisfied. The open range gap, which isn't visible on a normal time, on a electronic trading hour, but it's visible on the real-time trading hour, which I'll switch to on a lower time frame in a moment. So we have these inefficiencies that we didn't successfully fill, and this one, which is also, both of them are also in a buy side imbalance. So the drawing liquidity was clear enough to see that we are reaching for them. Going down to the 4 hour to show the open range gap, it's the difference in price from when we closed on a previous day and reopen on a new day, but in this case we opened without a retracement into the range. Going to regular trading hours right here on trading view, we can see those gaps very clearly. You can see when we opened, when we closed, and how we never actually retraced back into it. So that is it's another form of inefficiency. And with yesterday's position, yesterday's trades, this was the open range gap I was talking about. The fact that we never even retraced back into it at all made a new massive open range gap. I know the chart at the moment isn't the neatest, but I wanted to show that the drawing liquidity is still critical, no matter what my entry protocols may say. The reason I bring up the drawing liquidity is because if we know the drawing liquidity is lower, then of course on a smaller time frame, on our trading time frame, which is a 5 minutes, we should then be looking for buy side raids. So for example, in this case, for today's price action, I would ideally like to see us raid New York PM session and Asia session, because we know where the drawing liquidity is. We know where we headed to. So seeing these buy sides here raided would be the best scenario for us to take price lower. The problem now comes when we raid sell side instead. It becomes very difficult to buy. So I believe I'm going to incorporate that in my trading plan. If and when the drawing liquidity is clear, but we are not getting the raids that we need, in this case we need buy side to be raided for us to sell off. If we don't get that and we just continue milking lower, then rather just stay out from the trade entirely. The only other thing that would allow me to enter the trade is if, say, we had a new week opening gap or any other PD array that takes out a short-term buy side, then I could take that. For example, yesterday during the New York session, actually during the London session, we went up. We were not able to sweep London's high, but we went up into a premium and was able to sell off from there. In this case, we retraced, pierced below the old new week opening gap. When price came back up to this new week opening gap, that should be an indication to sell, probably using the CB in this instance to sell off from there, especially when the drawing liquidity is clear. If it's not so clear, or if it's not aligning with our trading plan, then rather just stay out. The last thing I wanted to add, which I should have added in the first video, is I know that the liquidity sweeps that I'm referring to, the fair value gaps, the new week opening gaps, are all from ICT himself, and this was mostly covered in the 2022 mentorship program. Then I'm incorporating that with the 2023 silver bullet model. Yes, I know I'm adding those two things, but the person that motivated me to combine the two before I pieced them all together was Nexus Blast. So I don't want to be one to say I found it all on my own. And yes, I was already incorporating it with my trades, because at the time I found it to be, whenever we get a 2022 model happening during the silver bullet, that's a high probability trade. I never actually developed that as my own model to trade. So now that I'm incorporating both of them, I just wanted to make it clear that the person that gave me, or that allowed me to piece them all together clearly, was or is Nexus Blast. That's all for now. I will make a new video on how today's trades go. Take care.